Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts, and it looks like Bitcoin got a little bit of a bounce off the super trend, which we'll get to in a minute, on the 4-hour time frame, and reclaimed about half of that wick thus far. Are we going to see a ABC to take the rest of the wick or not? We did get a rejection off the 618 on this diagonal pitch fan path to the upside, and the angle in which we were trending, which was kind of in this manner in a diagonal path, has now become more horizontal in nature. Are we starting to see this come down in a manner here? Are we trading sideways now in this range with the equilibrium and the point of control here? Let's do a fixed range volume profile on this range and see where the point of control is at. Point of control comes up to the 500 region at 30,526. Will we get a rejection and a C wave down to create a double bottom of sorts, confirmation off the wick idea or not? We are still figuring this out as we go into the liquidity of high block. What is high block capital? Well, people lock their liquidity in the charts to get burned to a crisp by the market maker, and we get to see where those liquidation points lie and where the crispy characters got burnt to a crisp. So let's do that now, shall we? All right, so as we go into this, we were seeing as we dropped and made that C wave that we predicted to come down from this point yesterday on the live, we said we would come and make a lower low and start to reclaim some of that wick, which we did. We started to see some more shorts open to longs here, $196 million pools here, and they came without hesitation off the divergence here to gobble these characters down here, the 100x without fail.
Fatality.
And yeah, they came back to those guys, and later on to their 50x partner in crime here. And then they retraced back down to ping some liquidity and release some of the pressure and take some of the 100x out of these longs. Not so many longs getting pinged in until this spike up here. So we did see this fake out breakout and then turn into a breakout. We came here and pinged some of the liquidity. Why does it do that? I don't know. Let's go do this again. So they pinged they came and took some of the longs, pinged in some shorts, and then pinged in some longs and took those 100xers out almost immediately. 99 million taken right there. And then their partners in crime are still getting paid in the charts here. Little pools entering for longs. The shorts that entered up here are most likely going to get wrecked coming up to that region. We'll get into the levels of that now, since the noodles of the ramen noodles, the broth is very thick down here, so there's more noodles up above here. So coming up to that 30,820 and clearing out these 50x pools would be the next idea on the menu. However, if we look at the higher time frame external pools, we can see where possible pools may lie in wait. As it stands, in the last 12 hours, we pinged in more shorts than longs, so it looks like we're heading there, but the 12-hour time frame doesn't mean anything to me. So we go to the 7-day. And yesterday we went and hit the highs and then came to the lows and spawned some divergence off of those players. On the 7-day time frame, we also have some guys still down below at 29,650 and 29,300 region that we could start to see come back to after coming into some of these guys up above. Now if we go to the 32k region or 31.6, we got some pools starting to form up there again on the 7-day time frame. We previously had taken out some of these pools, spawned some divergence, bearish divergence, and came down into those yesterday. Now if we go to the monthly time frame, if it will load. Shout out to everyone here, new sub here, already high with the music. Thank you, thank you. Thank you for joining us. All right, so on the monthly time frame, we came back for that near 40 billion. If you go all the way up to 31.7, that would have been $50 billion taken, but it is instead 34 billion that they took and then came down into the liquidity here. Now you do have double digits down here at 29.4 and 29.3 that they could come back to after spawning some bearish divergence off of some of these 30,600 region on higher time frames. Are they going to get the stamina to come up to 31.7 on a Friday? I don't know. It might be sideways for the weekend, come down into this over the weekend, and then close out the week strong off the divergence they spawned for reclaiming the wick entirely. I wouldn't consider the breakout to occur just yet. We do have a large amount of liquidity down below based on the monthly time frame here, particularly on the regions here, which would insinuate that Bart Simpson play to the downside. Are we going to see a retrace into some of this liquidity? We do have double digits down below, so something to look out for on the imbalance on the monthly is to the downside. However, when you start to shift your attention to the external liquidity range of the 3-month, you do have some pools percolating in the double digits of 50 billion plus all the way up to 33k that could suggest a stab up into these regions yet again. And then you have some pools that would insinuate coming down to stop out some of these characters to reach that target down here at 29k. Do we start to come down and reclaim this wick and knock out some of these characters to get the stamina to hit up to here, or have we already achieved that with the 29.4 attack? So we do have a large pool also forming down here. If you just go solely off the heat signatures, there's a hotter target down below than above. So let's go to the 6-month and see where it lies. 6-month time frame also has a hotter signature in the 133 and 146 billion down at 24.6, insinuating for that 𝗏𝗏𝗿𝗀 play. And this is where they would skip this region with not that much in between here. If you look to the upside, you do see double digits in the nearing 100 billion, some at 100 billion at 33.3 and almost 100 billion at 33.6. So the liquidity pools are thick to continue higher if they choose to do so. Are they accumulating or distributing their positions is the question. If we go to the 2-year time frame where you have all of these liquidity pools up above, then you see the 450 billion leading to 33.2. So I'm of the mindset that if they come down into these regions and get 50 billion and 40, like a cool 100 billion off of these 𝗥𝗲𝗹𝗁 ideas, they could knock out these guys from paying these guys to come up to here. And then from that region, then they can decide if they want to 𝗏𝗏𝗿𝗀 down or not. But overall, overtone is, I would say, bullish to come up to at least these targets at 33.2, or in the conservative area 32.4, at least to get that 165 billion off the table. They have done that before here, where they came back and grabbed 200 billion and then left 150 up on the menu and then retraced down to the 618, only to come back to it a few days later. So just because there's liquidity there doesn't mean they always take out that position immediately. So if they come up into this region, maybe they leave the 33.2 alone or the 32.8 alone and just take the 32.4. So conservative target, taking out some of these pools on the external liquidity pool would make sense before a sharp reversal. So coming down to here, getting everyone bearish, and then coming up to here and then actually dropping it would make sense to me. If we go to the monthly time frame and start to look at our charts, this diagonal pitch fan to the upside is also a daily support level that we're trying to reclaim here. Do we lose this daily support or maintain it? These daily support lines at 30,270 have been honored since this region. We came back, we bearishly retested and failed out of them, so they are honorable levels, which we closed out daily candles at. You can go back and check this out for yourself here, wick close. So if we lose that, then we come down into the 29,657 region, which we did we get that wick down there? We didn't quite hit it just yet. All right, so let's go to the Binance chart and then turn on our oscillators and see what's up with the fibs. So we put out a bearish and a bullish trend-based fib level for you. So the bearish projection is here. You take your trend-based fib level and you slam it to the downside with this impulse here, and then you look at the retrace here. Since we've made a higher point than this, it has not been honored, but looking at it beneath that 29,868 region, actually I would have done it from here. This impulse ended here and it was originally up to that point. So until you can go beneath 30,121, then you would be looking for bullish setups, and the 236 down below is from this impulse retrace idea. Since this got negated, I deleted it, but that's how you would have been looking at that conservative target. Once we negated that 236 at the 30,121 region, then this was also a negated idea of the bearish trend-based fib level. On the bullish side of things, you do the same thing in the opposite direction. You do an impulse retrace in this manner. So you go up, impulse to this point and retrace to that point, and that will give you the math up to these regions. Right now we are consolidating in the area of the 786 at 30,398. So if it stalls out here and then the trapdoor is released at the 706, we could come back down, and this is where you get your 236 entry model. The 236 would have had you at hello here at 30,069 even. So if we go to turn on our oscillators, what are our oscillators here? Well, if you look at the link in the description, we do have momentummaster.info. Scroll down to features for more. You can turn on these toggle switches to see what Momentum Master is about, or read about each of the components as we go over them. So as we approach the trend cloud on the 4-hour or the 1-hour time frame, this is a mighty thick cloud to pierce above on a Friday, so we could see this rejection off the cloud as we normally do, and you get this rejection and come back down for some support on the hourly time frame. Before we do that and get ahead of ourselves, we'll just give you a little quick update on the 4-hour. 4-hour has crossed up the baselines. Well, what are the baselines? Well, they're your first sign of reversal. You can read about them there. And the baselines, when they cross up with the price action above the baselines, upside begins. When they cross down with the candles beneath them, downside begins. They're your first sign of reversal in general. So we did previously have that cross down event, which has now been negated by this nice 4-hour candle. If we look at the 6-hour, 6-hour has yet to cross up, but giving that insinuation of it happening with the baseline starting to close, and you got 1 hour and 43 for that to occur. If we go to the 8-hour time frame, 8-hour time frame has given you this cross down signal from back here, and we've been honoring it thus far. We're starting to give the candle above the baselines here, giving that potential to reverse if the candle closes in the next 7 hours. This is, we just previously closed one here, so if this gets rejected in the next 8 hours and closes beneath the baselines, this idea is still on. The thinning cloud of the trend cloud is also noteworthy in terms of this being a possible bearish retest to come down out of the cloud. Previously we hit some bullish order block inside of that twice and bounced up within the cloud, but now we are beneath the cloud, and you start to see these potentials of downside occur with the curvature of the cloud expressing the end of the momentum. You've previously had something like that here, where you come down out of the cloud and you come back, bearishly retest, and come down further. So the cloud is your sign of reversals and continuations and expansions. That's also here to read about on the trend cloud, volume weighted cloud formula that expands and thins according to the amount of volume in the asset. So this is showing you that the volume is slightly tapering as we have this cross down event on the 8-hour time frame. Slightly bearish in my mind. If you go, let's start our descent through the time frames on the daily. So the daily time frame, we were talking about this cross down event back on Sunday, and this has shown nicely that we've seen that start to occur as of 3 days ago, since Tuesday basically. This candle has yet to close, so this could all be gobbled up and come down further. You never know overnight what will happen. As the cloud shows on the daily time frame, it's still mighty thick and bullish. We're holding the super trend, and it would take 6% to negate that, so we have a healthy uptrend on the daily time frame. If we look at our oscillator B, we have reset the daily time frame stochastic. However, the Williams is now getting to that alarming cross position. If this daily candle does start to give back some of the love that it has been given to the upside here, then this will start to cross and give you an alarm signal, which could suppress the daily time frame from taking off, and that bearish idea of the Bart Simpson could be inbound. If you look at the 3-day time frame, the 3-day closes in 2 days. Also the tapering of the cloud here, not extremely bullish, and the curvature of this not going up just yet. So this could come down and retest that cloud idea on the 3-day. If we go to the 22-hour time frame, which we like to take a look at, the unsyncopated rhythm of the 22, attempting to make a curve up here. The money flow is coming beneath the RSI here, and you're starting to see this Williams possible suppression of takeoff on the 22-hour time frame. You did have that cross-down event back from June 26th that has still been maintaining that fatigue idea of the 22 taking off, and it has been getting those bearish divergences upon takeoff and resetting sharply. So until we get this Williams in a very oversold position with the rising sun on the 22, I'm not necessarily sold on it. If you want to take that risky play on the 22-hour time frame, we could come up to that 32, but I don't think we're necessarily done with this range just yet. If we go to the 12-hour time frame, we can see we are now trying to reclaim the cloud of the 12-hour, which has now started to thin and taper. The angle at which is also slightly starting to curve in a manner here, which could insinuate that 8-hour. And you start to see how these narratives start to play off one another and create a grander narrative. That's why the 12-hour has been struggling to take off. We had that hidden bullish divergence on the money flow with the baseline, with the RSI deviation, which has started to come back to with the sharp upside play. But now we're getting the money flow above the RSI expressing a fatigue possibility, and this could get suppressed by the Williams here as the momentum starts to fade out on the Williams on the 12-hour time frame. If we go to the 6-hour time frame, 6-hour attempting to take off, had previous bearish divergence on the money flow and the RSI. We are getting to that oversold region. It could come down a little bit further to make that fertile crescent double bottom of the mountain, similar to here where it starts to get green and filled with water of the average of itself. I start to see these as mountain peaks over time, and this looks like a valley filled with water. And then if it gets green, then it's a fertile crescent idea. So that's what we call it, the fertile crescent, getting into that oversold region, and ideally a double bottom of that. Previously we saw this like pattern possibility of the shoulder head and the shoulder on the Williams, which did play out too. But yeah, seeing this possible suppression of the 12-hour and the 6-hour from takeoff could be just a liquidity grab of a B wave to continue to the downside. Now if we go to the 4-hour time frame, let's start to expand this out a little bit. All right, so we're going to get out of oscillator B and just go over the super trend here, because this is what I was noticing when we made a lower low. All right, so this super trend, this little thin blue line, the super trend shift has back testable levels, which we did wick off of and continue higher. And so we bounced off it again here on Wednesday, also going higher. So the super trend was bullish on the 4-hour time frame. 2 times it honored it, all the way back from Saturday, June 17th. And as of late, we are now broken on that idea. We closed out candles beneath the super trend on the 4-hour time frame. Is now a bearish super trend. So the bearish trend is in effect on the 4-hour until we can reclaim that level above here at 31,170. So this cloud shift idea also forming on the 4-hour, suggesting we could come lower. Now you start to see how the narratives start to play out. We had this curvature playing out here in advance, telling you that this could have been a nice short opportunity, which did occur because the curvature of the volume on the asset was tapering, showing that this could have been a fake out breakout. And here again, we're not really seeing the follow through of the cloud just yet on the 4-hour time frame. So we could come back down to the bottom of the Keltner channel, which is this ATR based Bollinger Band, which also is that reclaiming wick idea, which we have yet to see. If we go to the 4-hour time frame, it is getting to that 50 level. Do we break through and continue higher is the question. Let's go look at the liquidity pools on the 1-minute time frame and see if they coincide with these levels on the fibs. Now you start to see how the structure is going to form of the liquidity pools in conjunction with the TA and the momentum. Let's go take a look. So you have a 95 million pool of 100Xers up at 645, 30,645. Let's see where that puts us. 34,645. 34,645 would put you smack dab in the middle of this golden pocket of the trend base fib extension level. So that would put you up in here for a little liquidity grab also happens to be a 4-hour fair value gap recovery. If you start to go down into the time frames below, it will likely be filled on that. Yeah, that's the top of this little range here. So there's there's no fair value gap there, but yeah, basically there's another fair value gap over here at 31.12. So yeah, coming to this little guy here at 4.5, I believe it was. There, let's just do that. So that 100x pool of characters could be, and his partners in crime, all these little 50x guys, these pools of 50x which entered down here, which are in drawdown. Right now it looks like the current retrace is coming to get that 41 million at 30,240, which opened up here, or here rather. So they could be coming down to get these 100xers and decide what they want to do at that time. If more longs start opening to shorts, right now the shorts are fatigued. So if more longs start to open down here, then they could just use them as fuel to continue to reclaim that wick. We lost a lot to Father Time, so we can only go off of what we were talking about here in terms of liquidity below. The 12 billion at 29.4, 13 billion 29.3, 5 billion 29.5, and 7 billion 29.6. So this is why you need to look at the external pools, because the 1 minute gets lost to Father Time, and those pools that were here are now there on this chart. Okay, so we already expressed that the 1 month and 3 month and 6 month are kind of calling for a slighter, deeper retrace. So until we do that, I'm not super interested in taking like a massive long position. So that's where I stand personally. And yeah, coming up into this region for the scalp idea to get the pools up here is what the math is saying here. This is a shoulder, head, and possible shoulder that is retesting the neckline if we do something like this. And then you come back and possibly try to reclaim that cloud. The cloud is mighty thick on the 10 minute. Do you come back and bounce off the cloud here on that? Let's go to actually the 15 rather. So you started to get 2 time frames oversold as per our stochastic array on the indicator, telling you that you had 2 lower time frames oversold. You got the baseline cross down event occurring with the base price action beneath the baselines. So this is a reset of the 15. So does this 15 minutes start to come down to the cloud here and reclaim some liquidity and then bounce off the cloud, or do we consider going lower? The hourly time frame is also overbought and reaching the resistance of that hourly cloud we pointed out at the beginning. Cloud is very thick, insinuating the offloading of positions being more inbound than not. So we could be seeing that. However, you do have the bullish idea of the baseline cross-up event intact and each candle closing above that so far. So until you can get some hourly candles closing beneath the baselines, this is still poised to possibly stab up and reclaim the cloud. And this is how these if-thens work. So you could come down to the adaptive trend-based moving average here, which we did reclaim, and see that vector rise up. We got 30 minutes for this hourly candle to close. You had the previous fertile crescent of the hourly here. This was a great idea for the hourly play. And a lot of times we talk about this on the live a lot. Okay, so you get bullish divergence spawning on these bullish divergence crystals spawning off of the money flow and the RSI here, which then triggers the stop loss hunt, and they do the C wave down lower, and then based off of that you get that smooth entry right here. So don't necessarily always take the bullish divergence, use the bullish divergence as a ploy to see the liquidity grab play out, and then you get your nice smooth fertile crescent oversold money flow disparity between the RSI, and then played out. Now you get the money flow disparity on the other side of the equation with the Williams overbought. Does this Williams go sideways and bring this average of itself up, or is it V-shaped back down? That's what we're trying to think about, as the overbought oscillator of the stochastic RSI on the hourly needs to cool off here. So do we go sideways, or do we start to return back down? So you have three options that could occur here. You could go sideways, or you could go down in this manner and then go up, or you could just V-shaped all the way back down to the bottom of the range and lower. All right, so far the baselines are still good, though. Ideally, when you look for shorts, you try to look for them up in this region on the hourly time frame, where the baselines come above the price and you start to see the candle close beneath the baselines, and then you start to see some bearish divergence form, and that's your cue. Top of the Keltner channel as well, as it stands right now, we're not at the top, but we are at resistance. So this is where you would think about it as a range. We came up back up to this little range. Is this a larger time frame C wave to the downside? Are we A, B, C'ing our way down like in this manner? A, B, C. If we meet with resistance there, I don't know. Come down to the adaptive at 29.1. There is the liquidity on the monthly time frame down in that region here. The double digits to take out if we possibly want to reclaim higher regions. Taking out a little bit more of this liquidity would be ideal, in my humble opinion. Let's go back and see what's being pinged in one last time and bid you adieu. Shout out to everyone here. Prehab, what's going on? Jacob, thank you for stopping in. C, nice to see you. Ha ha ha, pardon the pun. Nice to see you, get it? Ho ho ho. Alright, so we are getting the cross up event on the 4 hour though. So the candle closing above this baseline is bullish for a 4 hour continuation idea. Just to note, they're not to be ignored. We said that back here, and sure enough, boom, we did drop down a few 4 hour candles later. So if we manage to stay above these baselines at 30,196, then you can expect a 4 hour play up into these regions, possibly. So we did have that break of the super trend, so it is kind of breaking a 4 hour structure here, in possibility of coming lower. Personally, like I said, I would like to see the reclamation of this wick at 29,638. There's a liquidity down there, the entire region at 29,498, 500 basically. But you also have these adaptive and weighted moving averages we could come down to as well, which we also generally see a reaction at. In terms of being overbought and oversold on our oscillators though, it is having the momentum to the upside and not to be denied. If we look at the leading MACD, it has yet to cross. It's at the precipice of crossing. You can set this alert to your phone if you want to see if it crosses up or crosses down on the 4 hour time frame. You set an alert to pump or dump on the time frame you're choosing, which it will alert you to. I always set it personally to the 5 minute because it lets me know immediately. You see this 99 plus alerts, it lets me know what direction the market is heading and when. So as it started to retrace just a moment ago, it's saying dump, 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 because it's starting to go down. So if that was the idea you were looking at, basically it would have given you this idea coming down as it's coming down. Okay, so we are holding this trend-based fib level of the bullish trend-based fib at the 0.65706. These are the institutional regions. If you hold above the 706, the permission can be granted to come up to this 1 and 1382 level. personally, the 1 hour time frame needs to chill out for a bit, so wait to see what the 1 hour time frame will do. As I said, the cloud is mighty thick and you're getting meeting with resistance potential on it, so it could come down a little bit on you here. So seeing if it goes sideways and resets a little bit and brings this cloud to a kind of angle here where it would potentially thin and give you the idea of continuation to the upside. As it stands right now, it's thick and could continue getting thicker if this is a C wave down. Okay. Basically, the hourly baselines have been pretty spot on. We said it yesterday when these baseline crossed here, and I said these candles need to close above it, which they got continually rejected on. And so when these baselines start to cross and you get these candles above them on the hourly time frame, that's a pretty solid situation to think about in terms of reversal plays. This was about 2 p.m. my time. I was teaching at the time, could not put out updates to you, which is why the indicator is meant to be your guru, not me. I'm just a pawn to the suite that I use. So if you're interested, check it out. And we are getting bought back up here on a short time frame. That was a mighty bullish buyback on the 5 minute here. Let's go see what was pinged in really quick. Nothing. So it's just basically like people buying and selling within the range to try to see what interest they can generate. A lot of times, like for example, this candle, I call it like a ping. They ping the liquidity like a sonar pulse. So this ping here pinged both sides, right? So here it pinged both sides and pinged in 67 million in shorts to 99 million in longs. And so they immediately came back, boom, and took out the longs. But they get to see where the interest was generated. You had 67, 76, 25, all these pools pinged in of shorts, and then you had all these pools pinged in of longs, and they have their algorithm calculate which side is juicier, and then they go that direction. So it's kind of a ping. They did it, this entire thing could be a ping. They go like this, and then they see all these pools entered, and they decided it was juicier to come back to this. And so these liquidity pools kind of like the price spike and return to equilibrium is kind of a ping of liquidity. So coming back into these shorts that are now underwater, and that guy we talked about up here, at the 30,645, it looks like they might not even wait. If they don't hesitate off this baseline, they could just pierce up and wick off of that guy and decide to spawn whatever divergence, if they're going to come back down into this region. Let's go to the 15 minute one last time. See what the 15 minutes doing. So the 15 minute is doing the bullish retest that we talked about the other day. This is when you have this come down. Oops, let's do a thicker arrow here. You have the stochastic coming down here while you have price action going sideways. In this case, it's almost going up while this is resetting. So coming off this cloud idea may not even occur. We could just go up from here. So as it stands on the 15-minute cloud, being realistic with what just occurred, we do have this thick volume coming up on the 15 that needs to be checked. We do have the cross down event in play thus far on the 15-minute, but that reset of the stochastic could be what you need to get permission to stab at that adaptive here, which is the cloud on the hourly. So if you look at the hourly cloud, this could be the permission to be granted by the 706 to come up to these regions. You have to break this hourly trend and hold candles above this level for it to be genuine above the 591 level, and this would reclaim the the weighted moving average as well. So wicking up into this liquidity and getting sold off at the 645 level, if you cannot reclaim this cloud, then going up to these upper regions is a moot point. So basically see what happens up here and look for the reaction and see if it comes down to these regions. Now if you didn't have me at all, like if your internet was down and you just had your phone, you could just take these stochastic array things and just ignore me if you like, because a lot of times these things are deadly accurate too. These alerts to your phone which tell you 5 time frames oversold, 6 time frames. We said the 6s are pretty deadly. That was around 4 p.m. London time. The 6 did confirm you had the cloud shift here. Sadly, with my work, I cannot be plugged into the charts like some streamers, so I cannot give you these plays. You have to just look at what we're seeing here in retrospect and say, ah, that would have been a good entry. This cloud shifting here and then starting to hold the cloud as it comes up as a nice guide to the trade, if you will. So this 6 time frames oversold has a higher probability because of that 6. And you look for that oversold region on multiple indicators, and that's what the 6 represents. It's not just one indicator, it's 32 indicators, more than the human brain can handle. So that's up to you to decide if you want to add that dynamic alert system into your playbook. I did backtest the living daylights out of it and found it to be deadly if you get to those high numbers. Alright, so as we see now, we're at a point of indecision. The 15-minute needs to decide whether this cross down is going to be negated and come up to here, and the hourly time frame. I still think the sideways price action of the hourly getting rejected here and either coming down, finding some support off of the baselines here is kind of the play at this time, and seeing what it does if the reset of the hourly time frame. So the hourly time frame is what we're looking at, and it doesn't need to reset completely. It could come down like it did here for a double top scenario and come up. It could come down ever so slightly, bring the money flow back, because this average of the Williams needs to come up some more. So this could come down and then bang up some higher even. So this could come up on a Saturday afternoon, even 6 a.m. just before the close, and try to close out a daily candle midway through that level. Where would that put you on the daily time frame? That would give you a bullish engulfing of this previous thing. If you start to get a bullish engulfing and daily candle closing above this level, then you could basically start to see this cross down event possibility disappear. If you start to see the daily candle closing in this 786 sideways region and not up in this region, then you could still see that C wave retrace sooner than later. Is the weekly candle close in 3 days on the weekend going to close in a spinning top fashion again in purple, or is it going to continue up in these regions and start to close out in bearish support resistance flip area for the daily support levels? That is the question we will explore together over the next few days as we see the charts, and as we go into the weekend. Go out, enjoy nature, enjoy your family, enjoy your friends, and trade safe, most important. And yeah, we're going to see how this cross down event plays out. Do you get the bounce off the cloud here and see the hourly come up to that liquidity pool? That would also reclaim this SR flip, this level here. So that's the story, and we're sticking to it, folks. So thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing you the fire, the precision, the accuracy, all that fun stuff, and the liquidity and the momentum